Welcome to the Transparent FX Academy. I'm Nick, and I'm a top author on TradingView with over 190k reputation points. If you're new to the channel, make sure to subscribe. This is the place to be for high-quality, free trading education. Now, without further ado, let's jump straight onto the charts. In this video, I will be speaking about gold. Now, as usual, to keep the video as educational as possible, first I will be covering the technical aspect for this market. Then we will be moving to the order flow by looking at the commitment of traders, so the COT data, which is what the non-commercials, so the biggest speculators in the market are doing, which are essentially hedge funds, so the big players in the market and how they're moving their orders. And by the end of the video, by using a combination of these two different types of analysis, we will try to understand where we have the highest probabilities for the next potential move here for this pair. Now, starting from the monthly time frame, what we can see is that we have a market which at the moment is trying to break above a quite significant level of previous monthly resistance, which if the market will successfully break to the upside, we could expect the market to reject to the upside. So essentially creating a full breakout above this previous level of resistance, which at that point would be turned support. So from a monthly perspective, everything seems quite bullish. Now, dropping down on the weekly time frame, what do we see? Well, from a weekly standpoint, we can notice how at the moment we have previous weekly resistance, which is now turned support at this level. In fact, exactly from this zone, the market created the previous correction. Then the market broke above the zone, and currently it is going for a retest of this previous weekly resistance turned support here. We can also notice that from a pattern standpoint, when you have an impulse like this that breaks structure to the upside and then the market starts a correction, you can measure that correction by taking a Fibonacci from the low to the high of the impulse leg. And if we do that, we can see how we have the 0.618 Fibonacci retracement, which is also the golden ratio, which is lining up perfectly with this previous resistance turned support, essentially creating confluence of support at this level because we have both the Fibonacci 0.618 and also the previous horizontal resistance now turned support here, both lining up in the same area of price, which creates confluence of support. And what we know is that inside of a confluence of support area, you have increased probabilities of getting institutional longing, which in this case would further increase the probabilities of a potential rejection to the upside away from this level. Dropping down on the daily time frame, what do we see? Well, from a daily standpoint, I did speak about gold quite a few times in the past. I spoke about it when the market was here, explained all the reasons for which we could expect this impulse to the upside. Again, after this impulse, I explained all the reasons for which we could expect first this correction and then the continuation to the upside. And again, that is exactly what the market gave us. Then after this impulse, I explained all the reasons for which from here we could expect the creation of this higher high. And after this correction, when the market was at this level, I explained all the reasons for which we could expect this rejection to the upside. And by the way, I will link in description all these previous analysis, so you can go and check them out for more free education. Now, in the very last analysis, I explained why after this impulse we could expect first a correction and then the continuation to the upside. However, that was before this massive retracement candle, and that is why I want to make an update, because obviously the structure has changed after this move to the downside, because this correction was not a slow correction, we had a massive correction. So obviously at the moment I am not looking for any kind of longs, so that is why I wanted to update on the current situation that I see here for gold, because still, even though we had a massive correction, there is a very interesting situation that we have here, especially from a daily perspective. But before we continue with the technicals here for gold, I first want to go and see what we have when it comes to the commitment of traders, so the COT data, which is essentially what hedge funds, so the biggest players in the market, are doing. And by the way, I don't remember if I already told you, but you find all those previous analysis that I was speaking about in description, so you can go and check them out for more free education. Now, continuing with the analysis here from a order flow perspective, what we have to notice here is that we went from having 71.4K net positions all the way up to having 200K net positions. So essentially what happened here is that institutions went from having one of the lowest positioning that they ever had. So essentially they were positioned at the maximum to the bearish side that we had historically. And here we can see how we're now sitting with one of the highest net positions ever. And this happened in a very short period of time. So we had huge institutional longing in a very short period of time. In fact, we can see how just with the two last reports, institutions first added 15,300 longs and closed 980 shorts. And now with the last report, they added another 20,100 longs and closed 8,200 shorts. So we're seeing a huge amount of longs added from an institutional perspective and shorts getting closed. Now, this is very bullish for gold because it definitely makes it stronger. Now, moving back to the technical side and keeping in mind that institutions are adding longs, what we have to notice here from a daily perspective is that if we will see a bit more bearish price action, that would essentially create a very interesting M pattern from a daily perspective, because if we follow the movement, we can see a move higher, correction, move to the upside, and then a move lower. Now, after the creation of an M pattern, what we could expect is a rejection to the upside for a completion of the pattern at the neckline. So it is a bullish pattern that the market is creating here from a daily standpoint. And after the creation of such a bullish pattern, we could expect a completion at the neckline of the pattern itself, which in this case, the completion at the neckline would be exactly at this level, which is the previous daily support turned resistance here. So if the market from here will create this move to the downside, we definitely have the possibility of seeing more institutional longing, which at that point would further increase the probabilities of a rejection to the upside for the completion of the pattern at the neckline. So if we get this move to the downside, how I could be approaching this potential move higher. Now, as usual, trading is reactive and not predictive. The monthly, weekly, and daily combined with the COT data, those are the best time frames from a directional perspective. However, when it comes to confirmations and entries, the best time frames are the intraday time frames, so 4 hour and lower. Therefore, what I could be doing potentially is monitoring price action from an intraday perspective during this move to the downside, waiting for the market to shift from an intraday bearish market as we would have to an intraday bullish market. And if the market would shift from an intraday bearish to bullish market and provide to me one of my valid entries, at that point we could be looking for a potential move higher for the market to complete this M pattern at the neckline. Now, if you don't know what I'm speaking about when I say valid entries and these kind of things, you want to learn more, I really suggest that you go and check out the transparentfxtrading.com website, which is linked both in description and in my bio. Here, you have the possibility to get access to my entire courses with all the rules of the strategies. You also have the possibility to get access to one-on-one private mentoring, the web market breakdowns with the Telegram signals, the COT data software, which is precisely the one that we used in this analysis, the trading station software, which puts together everything that you need as a trader all in one interface. And if you continue to scroll lower past the testimonials, you will see that you have the possibility to join and gain automatically access with the email and password that you will create during the sign up process. So I really suggest to go and check it out as soon as possible. The link is both in description and in my bio, and I will see you in it. If you enjoyed the video, make sure to drop a like and also let me know in the comments below any new pairs or topics that you would like me to cover in the next videos. And I will see you in my next breakdown.